As the country navigates the uncertainty of the COVID-19 pandemic and the resulting economic fallout, the 2021 federal budget will be one of the most important of our time. With a focus on post-pandemic recovery efforts, the finance minister has said that raising taxes is not a priority, but speculation abounds around potential strategies to raise revenue to address the ballooning deficit. Don Scott is a partner and director of tax services with Welch LLP. He's a nationally recognized expert for his extensive knowledge in the area of personal and corporate tax. And we're so happy you're sharing that expertise with Newspoint 360 today.
Thank you, Sharon. Welcome to be aboard.
Economic recovery from the pandemic is expected to be a slow, sometimes painful process. It's been more than 2 years since the last federal budget. So if increased taxes do become part of the recovery strategy, where are those increases most likely to materialize? So let's start with the one that has universal impact, personal tax rates. How likely are we to see changes here in the short term, Don?
Well, Sharon, it's a tough question. What I do find interesting right now is that almost all of the provinces and territories have either already delivered their 2021 budget or are scheduled to do so in the next few weeks, yet we don't have a date yet for the federal budget. I think the federal government is struggling with the amount of money that they're spending because of the pandemic and keeping the economy afloat. And we're all well aware of the record-breaking, never seen before annual deficit that was noted in the economic update last fall. So they're going to have to raise revenue at some point. The question is, are they going to do it now? When it comes to personal tax, that's going to be a tough one for them. Certainly, a lot of their platform has always been to support the middle class and those who are trying to join the middle class, as they like to refer to. So are you looking at raising rates again on the, if you want to call it the top 1% or the top 10%? We're already seeing that in most provinces, or all provinces and territories, it's just under 50% or greater than 50% as the highest tax rate that gets paid by the, say, top 10%. So to raise that even more becomes an issue, because statistics have shown that once you exceed that sort of 50% barrier, where people are saying, I'm now paying more than half of what I'm making, becomes an incentive for people to not do that, quite frankly, legally, of course, you would hope. And in today's world, it's shown, especially through the pandemic, that physical presence is not really required to run your business or to do your work. And you could see people starting to leave Canada if that became if it became a very high taxed nation from that perspective. This coming budget, as I mentioned, they're spending a lot of money. We know they are. They need to, and thankfully they are. I think this coming budget is going to concentrate more on the spending side than it will on the revenue side. So while they'll be looking at some adjustments in the taxes, I don't see a personal tax rate hike this year. I don't see where that would make sense at this point. But someday, perhaps.
Well, it's good news for now, at least, but stimulating the economy is key to recovery. So let's look at the potential for corporate and business tax rates next. Is that a potential target for tax revenue?
Yeah, I don't see that one at all. That really would not make sense. When it comes to private businesses, small to medium-sized businesses, as it's referred to, the federal government actually has been working on lowering the tax rate. Also, for bigger businesses, when you combine the federal tax rate, which has been very stable, the federal corporate tax rate has been very stable for a long time, has not changed. When you combine that with the provincial corporate tax rates, it's a competitive rate, and I don't think the government would want to see them going above where other G7 nations are taxing corporations. Also, corporate income is not a very stable base to collect taxes, because if you're going through a period like we're going through now, businesses are not going to be making money, except for the odd few. If you want to look at the Amazons or the Apples or what have you. Not that that's Canada necessarily, but most businesses are struggling right now, as we well know, because of the economic downturn caused by the pandemic. I don't see that as a way to. It would make no sense to me that they would raise corporate tax rates on businesses at this point.
Well, we're hearing a lot, though, about capital gains tax increases, if not in 2021, in the not too distant future. Why is there so much focus on this area in regards to taxation?
Well, there's a couple of issues there as to why the speculation. One is it's perceived that, again, it is the rich who invest and report capital gains income. But it depends on how you, and it's the rich, if I want to use that term, I use that loosely, where maybe the general public and or the government is looking, if we can get tax money, they should pay a little bit more for the good of everybody, as it may go. It's seen as the rich or the top 1% that report capital gains or significant capital gains. It's actually not true. Once you look at the statistics more closely, you can have situations where there are taxpayers who would not be seen as rich people that might have a large capital gain in any one particular year. For instance, they sell their business or something of that nature. And that skews the statistics, because that in that year, it looks like they have a lot of income because of the capital gain. But in other years, they do not. The other aspect is it would have an impact on capital markets and investments in Canada. And again, I don't think that's something the government would want to do right now. It's interesting that it was in the NDP's platform in the last election to increase capital gain tax rates. And we know that the Liberals have a minority government. So in fact, doing it, they'd probably get support from the NDP, and the budget would get passed. The other reason, and it's more of a tax geek region, so I'm not going to really go into details, but a tax geek like me, in knowing how the tax world works, there's different types of income. And a capital gain, which is when you sell an asset for more than what you paid for it, or if you're a business owner and you want to take money out of your business to spend personally, that's referred to as a dividend. And ideally, the government would like to see a capital gain taxed at the same rate as a dividend. Lots of different reasons for that. That's not the case right now. A dividend is at a higher tax rate than a capital gain is. So another reason the government would look at it is to equalize those two sources of income. And again, I don't want to get too technical. And that's kind of the tax geek, as I say, coming out of me. But will we see it this year? It's possible. But again, because I think they'll be concentrating more on the spending side than the revenue side, I don't think it will, but it is coming. There's no question in my mind it will come at some point. If not this year, then probably next year.
Well, one industry that has been booming has been the real estate market, and people are making big gains on home sales. Is the principal residence exemption possibly on the table?
It's an interesting thought. So yes, that's a form of capital gain. When you sell your house, and these days when you sell your house, you're likely selling it for more than what you paid for it. And therefore, as I mentioned earlier, that is a capital gain. But there is the special rule that says if it's a capital gain on your house, then it can be tax-free, designated as your quote-unquote principal resident. We do know that in certain areas of the country, particularly the larger cities, there has been substantial increases in the value of real estate. And over the next number of years, there's going to be a substantial transition of that value through baby boomers selling their homes and moving, downsizing, what have you. Or even, condo owners in Toronto or Vancouver that are leaving the city and moving somewhere else. Again, going back to, you can work from anywhere. Maybe you don't need to live in the cities where there's high costs, and realize on your capital gain. So I think the government would naturally look and see that's an awful lot of value that is totally tax-free right now. Now, that's been in our system since the get-go. You shouldn't have to pay tax when you sell your house. But I do believe that's on the table. They will be looking at that. I don't think they'd eliminate it entirely. I think what they probably look at doing is limiting the amount of the portion of the gain or the amount of the capital gain that would qualify as tax-free. So maybe something like $500,000 when you sell your house. That's tax-free. Any amount of the gain over that, you're going to pay some tax on. I'm just throwing that out as an example. The government has not specifically said anything about it. It really is just speculation at this point. But again, the government is going to have to reasonably look at starting to raise revenue to deal with the deficit. And I see that as substantial wealth transfer that is not subject to tax today that they can see as a source of tax revenue.
Well, the changes to GST and HST rules for e-commerce have been in the works for some time and are expected to generate some $3 billion over the next 5 years. What about GST rate? It's now at 5%. It was lowered a number of years ago. Is that a potential target?
I'm not an economist. I am a tax accountant. But if there was one area that I thought might make sense for a tax increase right now, or in the near future, whether this year or next year, in dealing with revenue increases to help deal with the deficit, it would be an increase in the GST rate. As you mentioned, it was 7% when it was first brought in, and it was ultimately lowered to 5% a number of years ago. Some people might think of it as higher than that, but that's the federal portion when you have an HST. The rest is a provincial portion. What the feds can do is look at increasing the 5%. Why I say that might make sense is, one, it's a very efficient way for the government to collect tax. Businesses do it for them by selling their products and their services. Secondly, individuals don't have to file any kind of return to pay the GST. They pay it when they buy something. Why increase this tax now? I think we know that there is somewhat of a pent-up demand for those lucky people, the people who have been lucky enough to keep their jobs and continue to work and have a source of income during this past year. And they haven't had a lot of ways to spend that money. And so they're building up. I think statistics have shown that savings have been built up to a level that's never been seen before, simply because people aren't spending their money that they're making, that they're used to spending. But once we get through this and get back to people being able to travel and comfortably go out and for entertainment, for sports games, for movies even, and that sort of thing, they're going to start spending their money. And I don't think a 1 or 2% increase in GST will put a damper on that pent-up demand to spend money. People want to get out, they want to do things, they want to travel, and they can't right now. And when they can, they're going to. And so I don't want to say easy way. It certainly would not be politically popular in a sense for the government to do it. But I do see it as a way for the government to raise substantial amount of revenues that would not necessarily impact an economy that has so much pent-up demand from people who want to start spending again. So again, not politically popular. And so whether a minority government would want to do that, we'd have to wait and see.
Well, unconventional times will require an unconventional approach. Don Scott, thank you so much for sharing your perspective on the potential scenarios that lie ahead for Canadians.
You're welcome. It's been fun.